Ladies and gentlemen, good day and welcome to the Q1 FY26 earnings conference call hosted by Filatex India Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. I now hand the conference over to Mr. Tanish Bansal from Share India Securities. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. On behalf of Share India Securities, I would like to welcome all the participants for Q1 FY26 earnings conference call of Filatex India Limited. We are pleased to have with us management team represented by Mr. Madhusudan Bagaria, Chairman and MD, Mr. Ashok Chauhan, Visionary Officer, Mr. Nitin Agarwal, Chief Financial Officer, and Mr. Vedansh Bagaria, Vice President of Corporate Strategy. We will now have opening remarks from Mr. Madhusudan Bagaria to give an overview on the company's performance. This will be followed by Q&A. Thank you, and over to you, Madhuji.
Thank you, Danish. Good afternoon. A warm welcome to all attendees of this first quarter FY26 conference call. Today, with me are Mr. Ashok Chauhan, Mr. Nitin Agarwal, and Vedansh Bagaria. I trust you have reviewed the investor presentation, which has been uploaded on both our website and stock exchanges. Let us have a quick recap of our key financial indicators. Comparing the first quarter of FY26 to last Q4 of FY25, in Q1 FY26, the revenue was 1049 crores as against 1080 crores in Q4 FY25. The sales quantity stood at 97,263 metric ton, a slight increase from 96,561 in Q4 FY25. However, EBITDA grew by 2.7% to 77.8 crores, up from 75.7. PAT declined by 1.69%, reaching 40.7 crores, down from 41.4 crores in Q4 FY25. The decline in net profit is on account of rupee depreciation against euro, adversely effect of appreciation of euro against rupee. Comparing Q1 FY26 performance against first quarter of last year, the revenue was 1,049 as against 1,054 in Q1 FY25. The sales quantity stood at 97,263, an increase from 95,962 in Q1 FY25. However, EBITDA grew by 27.75% to 77.8 crores, up from 60.9 crores in Q1 FY25. PAT rose by 26%, reaching 40.7 crores, up from 32.3 crores in Q1 FY25. In domestic market, despite geopolitical upheaval and raw material price volatility, the demand was reasonably stable and we expect gradual improvement. However, the export market for textile yarn continues to face pressure. High raw material cost makes us uncompetitive in export market. The traders in India are still find ways and means to import yarns, fabrics at low prices from China, thereby causing pressure on margins in the domestic industry. Let me update you on the status of various ongoing projects. Additional yarn capacity with the investment of 235 crores. This expansion is expected to be completed by September 2026. Major machinery orders have been placed. Once operational, we expect an EBITDA of rupees 70 crores in full years of operation. Recycling project, the investment would be 300 crores. Building construction has started. Ordering of major equipment is going on. We expect to start production by 2026 September. In a full year operation, expected EBITDA is 80 crores. Stream infrastructure investment is 85 crores. Order of turbine done, construction of pipeline started. Hope to be completing it by June 2026. We have also signed MOUs with more than 50 tons buyers. Expected EBITDA is INR 60 crores in full operation. Renewable energy investment will be 27.6 crores. MOU signed with Messrs. Torrent Power. Expected to start getting power by February 2026. Energy cost saving in full year would be 18 to 20 crores annually. We have identified material handling and packaging as an area of concern. We have been facing frequent disruption in our packing areas on account of increased volumes as well as acute labor shortage. Packing is a labor-intensive and tiring work. Labor shortage is perennial and becomes a serious issue during festive season. To mitigate the problem of labor shortage in this section, which needs around 340 persons every day, we have opted for automation of post-winding tasks like doffing and packing of FDY and partially POY. This will reduce the manpower requirement at least by half to around 180 persons per day. Investment of 40 crores is being done in that. We expect it to complete by June 2026. Reduction in operational cost will be 6 crores. By reducing human handling, we are likely to have some benefit in quality also. We are buoyant about prospects of our industry. Upcoming PTA capacities of 2.4 million tons of ISCL and GAIL and 3.2 million tons by Reliance will reduce dependence on imports and freight exposures. We expect raw material prices to reduce once these plants are operational. In our assessment, these factors bring prospects for polyester filament business. Thank you. Now we can go for the question answer.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Param Vora from Trinetra Asset Managers. Please go ahead.
Hello, good afternoon. I wanted to ask you the question regarding the Chinese dumping of polyester yarn and other related products. So what are your views on the competitive industry from Chinese players, and how is Filatex protecting its margins amid this?
See, Chinese dumping is happening, but it has reduced considerably. The government has put MIP on a lot of HS codes, but there are a few HS codes still left. So we are working with the government to put a MIP, the minimum import price on that, so that this can be stopped. In the future, I hope we should be able to stop that. So we are working with the various forums, with the industry associations to get it resolved.
Okay, and another question what I wanted to ask was, can you provide insights into the profitability and revenue contribution of value-added products, and what is the strategic focus to increase their market share?
See, most of the products are value-added other than the POI. So POI is hardly now 25%. 27%. There's not much difference. I mean, the value-added products are giving, like FDY gives a good profit. So we are producing almost out of 350 tons per day of FDY out of the total production of 1,050 tons. Approximately 33-34%. That gives a better margin than compared. Second is textured yarns. Textured yarns are around 40%, and the balance is POI. Exactly, it's very difficult to say, but the value-added products would, on an average, give you 3 rupees more than the non-value-added at the moment.
Okay. Thank you for taking my question. I'll stand back in queue now.
Thank you. The next question is on the line of Neeraj Mansinga from White Pine Management. Please go ahead.
Yeah. Can you hear me?
I
Yes,
can
sir.
hear you.
Please.
Yeah. A few questions. One, what about the GAIL PTA plant? When will it start, and how will it impact your supply
The
for raw
GAIL
material?
is the first one to start. Whatever I had talked with them, they expect to start production by December this year. IOC is delayed. IOC is now gone to second half of next year. So maybe around August, September next year it will start. But GAIL is most likely to start by December of this year. This is what
GAIL is
they
1.2 million metric tons, right?
1.2 million metric tons. India is short by almost 2 million at the moment. So this 1.2 million will help a lot. This will reduce overseas prices, and in return, Indian prices will also get down because they are benchmarked with the landed prices.
Okay. So, Mr. Bigere, can you also give some comment on the imports? Because what industry was expecting that after the ISN codes being implemented, the imports will go down, but they're saying there's few more codes, HSN codes still being used for importing. Can you share some data points on that?
I don't have the data, but generally, I think I would say the imports which were happening, let's say if it was 100, it has come down to 30, 40. So almost 60% of the imports have gone. Still 40% volume is coming.
Got it. But who are fulfilling those supplies in India in the domestic market?
Domestic people. Domestic people demand has increased.
No, but just a question, on the related question. In that case, your margin should go up or the inventory should go down. So any comment on that?
So the margins have slightly improved in the first quarter. Normally, first quarter is not very good because there is a lot of labor shortage, and the weavers also run the plants at a lower capacities in the summers. The labor is a migrated labor everywhere. So they go back to the villages. So there is a shortage of labor. And also the consumption is not that great. Now from the second quarter, it starts picking up. The labor also starts coming back from mid-June till end July. They start coming back. So traditionally, first quarter is not a very good quarter.
Okay, so whatever impact the government had on the imports on the MIP, because whenever there is a larger demand increase, that time you will see an improvement in the margins.
Already some we could feel. That is why there is a slight improvement in the margin compared to last quarter in this quarter. Last quarter means first quarter of FY25 compared to this quarter.
Okay, that's one. Secondly, on the capex, you said about, can you just repeat the first item? We have 235 crores of capex. When it will complete and what is the about?
I said it will complete by September 2026. We have ordered the machinery. So the machinery.
Not the recycling one.
No, this is about the increase. The first one is increase in the capacity of the existing plant. The second one, recycle also is likely to get completed by August, September 2026.
And the capacity of existing, the 235 crores capex will complete by September 26. What EBITDA will it add?
It will add around 70 crores of EBITDA in the full year.
Oh. And
what tonnage? 300 crores, that will add around 80 crores.
And what is the tonnage for the existing capacity that you're going adding, which adds the 235 crore capex? How much capacity will get added on that side?
Our total will be around 125 to 130 tons per day, including FDY, DTY, POY. And
you're adding mostly FDY?
Yeah, FDY is more. FDY is around 48,000 tons. And DTY is around 14,000 tons. And POY is around 14,000 tons.
Oh, got it. Oh, that's quite a decent CapEx that we have lined up actually, yeah. And
Yeah, if I
and in
add
terms
up
of...
all, the total CapEx is coming close to 700.
Yes, quite decent. And all these will complete by, say,
All
September
will
26.
completed by September 2026.
Okay. And in terms of, can you also share when the margins improve? Generally, what type of margin then improve more? So, LDY or
Margins,
CY or...
altogether, blended margins, we should expect around 11%, 12% kind of margins. EBITDA margins.
Okay. Okay. Got it. Okay, good. Thank you. I'll come back on the queue.
Okay.
Thank you. The next question is from the line of Udit Segal from Pinpoint X Capital. Please go ahead.
Yeah, good afternoon, sir. So I wanted to know regarding the margins, sir. In the commentary, you said that the margins will start gradually improving from now. So what are the kind of margins we can see in the coming quarters as the season picks up? And what would we take as a blended average for the year?
I didn't hear.
Shall I repeat?
Yeah, please.
Okay. Sir, so in your management commentary, you have indicated that we can see the margins going up in the coming quarters. So what would be the range of margins they could go up to, and what would be the, like, a blended average for the year?
See, for the year, I expect the margin should be around 8.5%-9% EBITDA.
Okay.
And by the fourth quarter, I expect the fourth quarter we should be in double digit.
Okay, great, sir. And with respect to the CapEx we are doing, sir, for next year, most of it will come online by H2, September 26.
Before FY26 H2.
Okay. So the EBITDA numbers that we are indicating, say, you spoke of 70% on the polyester expansion and the 70 crores and 60 crores EBITDA on the recycling CapEx. Plus, I think some steam project also, you're expecting some savings on that.
70 crores for the yarn project, 80 crores for recycling, 60 crores from steam, and around 20 crores from power, renewable power. These are the four broad.
Okay. So these are, sir, these are figures for considering that the CapEx will come online for half year only. So if we go to the next year, then the figure should be double.
Half of all this.
A double of all this, I suppose.
Half. No.
Oh, no. Okay.
Full year. So in FY27, the effect will be 50% of all this. But yes, for power, like, it will come full, because power will get started in this financial year only. And steam is likely to get completed by first quarter of the next financial year. So that will be like 3/4. And the other two will be 50%.
Okay. And sir, how confident are we about this new recycling technology? Because I believe we are one of the few players in India who are doing like textile to textile.
Confident, that's why we are investing so much of money. We have tried in a small plant and then a bigger plant. So, I mean, we are very confident that we should be able to do. Maybe it can take some time, maybe 6 months to establish the product initially. But yes, we are fully confident about the product and what we are doing.
Okay. And you spoke of some tie-ups we already have for the offtake of this product.
We are in the process. Some tie-ups have started, but it will take time. We have already started working on that.
And we are expecting superior like EBITDA margins, like 35% kinds on this project.
Yeah, definitely.
Okay, sir. Excellent. I'll come back with the queue, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Anush Jain from Fininterest Capital. Please go ahead.
Hello, sir. Good afternoon. My question was regarding the difference from our competitors like Sanatan, which you mentioned in the previous call, like they are also having their expansion. So how are we different from them? Because our margins are relatively low from them. And as you mentioned, we are aiming for double-digit margins by the end of by the end of Q4. So how are we bringing that in?
See, from Sanatan or yarn and their yarn, there is not much difference. The margin you are seeing, but if you see the ROC or ROE, you will find there is not much different. This is the product mix which we do. Like we produce more of coarse yarns. Coarse yarn, the production is more, the margins are lower, but the investment per kg is also lower. So if you do your ROC or ROE, you will find not much difference in the returns on the investments. Same machines can produce like 100 kgs. If you make a coarser denier, if you make a finer denier, same machine will produce 60, 70 kgs. So it's a product mix which one chooses to be in. So it's not like you have to see the absolute number. If you see return on the investment or return on the capital employed, then you will get a better idea of the margins. And they are also have some portion of cotton, and they are also into some industrial yarn, which is altogether. But although those portions are small, but yes, they have. I think cotton would be maybe 15-20% of their production, and I have no idea, but approximately 5-7% would be their industrial yarn.
Okay. And sir, regarding the other income, which was around 11 crores, it is being reported from last 2 quarters. So could you explain from where it is coming?
Mostly it is the free cash flows which we have, which we invested in debt and other securities. In this quarter, we got a refund from GST. So there also we got 3 crores interest back. These kind of income, and plus the FDs which you have to give to the bank for opening LCs and all, interest on that also comes in other income. It's a combination of all these 3 things.
Okay, and is it expected to be normalized, like at what amount or something?
I think normally it should be between 6 and 7 crores, not more. 3 crores is additional which we have got this quarter. So that will go away. So it should be within a vicinity of 6 to 7, depending on the free cash flows which we maintain. As the cash gets utilized in the project, this will drop.
Okay. And so one last question regarding the investments reported in the balance sheet. It has been gradually increasing over the 3 years. So that's regarding like investments in bonds or something, like what are these investments?
Yeah. The free cash which we have invested in the mutual fund debt side, that is that.
Okay, like towards capital market side.
Yeah.
Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Kanil Mehta from Boring AMC. Please go ahead.
Sir, just wanted to know what will be our revenue from the recycling plant? What type of acceptance should we expect from a 300 crore investment, and also from the growth capex of 235?
Not able to hear you properly. For recycle, what I have heard you of around 280 to 300 crores in a full year. What was the other?
And for the growth capex?
The capex is 300 crores for recycling.
No, I'm telling for the 235 crores capex which you are doing at.
So 235 crore capex will all give you a revenue of around 450 crores.
And sir, going forward, should we expect the other income to remain, or it should come down from our... Going forward, should we expect the other income?
I can't hear you properly.
Mr. Kanil, can you please use your handset?
Hello? Yeah? Is my voice
Yes, sir, please
now?
go.
Yeah, now better. Tell me.
Should we expect the other income to fall down going forward as we start investing our surplus cash
It
flow?
will definitely come down. First of all, I said 3 crores which we have received this quarter will not come, so it will comes to 7, and then gradually as we start investing money for the projects, it will come down.
Understood. Thanks a lot.
Thank you. The next question is from the line of Pritesh Chedda from Lucky Investments. Please go ahead.
So just reiterating the expansion, so 245 crore is growth CapEx for the existing polyester yarn capacity expansion. Another 300 crores to be spent in recycled polyester, and you gave out a total of 700 crores, which will include the steam project and the solar power project, correct? That's how the 700 crores is.
Yeah, roughly.
Roughly. And then you said that the EBITDA will be 75 crore from polyester, 80 crore from recycled polyester, and another few numbers totaling 175 crore of EBITDA from 700 crore of expansion. That's how it is?
Yeah, correct.
Okay. Now, which portion of this will come in FY26 and which portion will come in FY27? Which asset will operational in FY26 and 27, if you could just tell that?
Only the power will come in FY26. Rest will come in all FY27. Steam will get started by end of first quarter FY27 and balance by second quarter of FY27.
So basically, the solar power project will come in 26.
Correct.
Okay.
And all the project we have tied up with Torrent and we have taken 26% equity so that it becomes captive. Okay. They are putting the project. We have done an MOU with them to buy around more than 20 megawatts of hybrid power. So that will reduce our power cost.
So solar comes in 26, all other capacity related benefits come in 27. Now, I don't see a CWIP still. So why is it so? In March 25 balance sheet, CWIP was not there. So where will we see this 245 crore plus 300 crore, this polyester expansion, recycled polyester project? Where?
Sorry, you are not audible. Now, there was some disturbance in the line. Can you repeat that?
I said I don't see a capital work in progress number for in FY25 balance sheet. Where you are spending at least 5.
The investment has started from this quarter only, so that's why there's not much capital work in progress. And this recycle we are doing in a different company, which is 100% subsidiary. The name of that is Texpil. So you can see that in a consolidated balance sheet, we have purchased the land and that cost is already there in the March 25 balance sheet.
Okay. And my last question is, you gave a double-digit margin number in quarter 4. So somewhere you're building in the PTA benefit in that number. That's how it is double-digit for quarter 4, or some other assumption is there?
So some PTA benefit will come, maybe not much, but maybe a 1% or something like that. Rest will be through demand in the market.
Okay. And the power benefit is assumed in this double digit or?
No, benefit I have not assumed because coming in February, it can get 1 month here and there. So that I have not assumed.
So you assume some benefit from PTA and basically market supply demand economics improvement is what you're building quarter 4.
Already we are at 7.4% and 1% 8.4 and another 1.5 to 2% will come from the market improvement.
Okay. Thank you very much, sir.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Shasha Porwal, an individual investor. Please go ahead.
Hi. So as you've seen, like the Chinese players have continued to export yarn at aggressive pricing. Are you seeing any risk of further price undercutting in India, and how do you see it going forward in FY26?
I don't see price cutting due to Chinese imports, but in India already we have tried to stop quite a bit of it, and we are working to stop the balance also. It is not that they are producing at a lower cost. The people are getting at what the government is trying to stop. They are putting a minimum import price, which is the actual price of the fabric, so that they proper duties and then it comes to India. That is the main reason.
Okay, thank you.
Thank you. The next question is from the line of Sevni, an individual investor. Please go ahead.
Hello?
Yes, ma'am, you're audible. Please go ahead.
Yeah. I just had one question. I just wanted to know if you could give us a CapEx guidelines on the next 2-3 years. I don't know if I've missed a question with that before, but like if you could help on the CapEx guidelines.
See, till September 2026, I have already given the guidelines. We'll be investing around more than 700 crores in various projects. Beyond that, we've not thought of. We would like to invest more money once our recycle plant starts. We would like to expand in the recycle business mainly. So once the recycle plant starts, we would like to put up more recycle plants. So major investment will be decided after that. Till 2026 September, this is the investment plan which I have already given, which is around 700 crores.
Okay. Understood. Thank you.
The next question is from the line of Neeraj Mansinga from White Pine Management. Please go ahead. Mr. Neeraj, your line has been unmuted. Please go ahead with your question.
Yeah, I just had two questions. One, the CapEx of 300 crores, does it include the land CapEx of recycling or it excludes that?
Yeah, it includes land, everything. Land.
Which is how much? The land would be how much?
Land was around 11.5 crores.
So not so much. Okay. And in terms of your, you said that you are appreciation led to lower impact in the EBITDA side. Margin side. So can you share some thoughts on how it led to it because of some payables?
We had a euro loan. We have a euro loan. So as the euro got appreciated against the rupee and the rupee depreciated, so we had approximately 10 crores of hit because of the currency loss, which is notional as and when the rupee recovers against euro, it can come back. But if we take the full tenure of our loans, we are still better than hedging it. And we did hedge some euro which are payable in this year. So 3 million we have already hedged, where we have a benefit of around 75 lakhs, which are payable in this year. Which are payable in subsequent years, we have not hedged. And as per the guidance of the person who advisor we have kept for Forex, we are moving ahead.
So this is not impacted the EBITDA margin. This is more impacted below the EBITDA, right?
Yeah. This is not affected the EBITDA. This is below the EBITDA. So net profit, this is affected, not the EBITDA. This is a part of
and the impact. And the impact will be to the extent of 10 crores or something. For the quarter.
Just because of the loss in the currency. But that's not an outgo. It can be recovered in subsequent quarters. Yeah.
But the interest that you have booked is 4.9 crores. So where is the other remaining part?
No, we have returned 4.9 and there is one more item which is currency loss. 7 point. How much is it? 1 second.
Okay, Forex loss of 9.9 you have written. Okay, got it.
Yeah, 9.88.
Okay, thank you.
Thank you. The next question is from the line of Janvi Shah, an individual investor. Please go ahead.
Hello?
Yeah.
Yes. So I just had like an industry level question actually. What trends are you observing in the downstream demand from the apparel, home textiles and the technical textiles? Which of these segments do you think will be structurally more important to your revenue mix?
So textile, mainly fabrics and garments, is more for our products. And I expect it to grow. I mean, with the FTAs being signed, like UK will likely to get signed within a day or two. If the US FTA gets signed or other FTAs get signed, the demand will increase significantly.
Okay. And so just another question. Since with the improving profitability and the lower interest burden, are we reevaluating the dividend payout ratio?
Yeah, definitely. This year, if we are doing well, we will increase the dividend.
Okay, sir.
But since we are investing a lot of money in projects, we have to CapEx. So that we have to also keep in mind because that's a trade-off. If you give more dividend, you'll have to maybe borrow some more money for the CapEx. So.
Okay. Thank you.
Thank you. The next question is on the line of Viral, an individual investor. Please go ahead.
Hello.
Yeah,
Hello.
hi. Go ahead.
Yeah. So I wanted to ask about our product mix strategy. As our product mix is static, so are we any plans tilting towards high product value DTY or any specific yarns to de-risk our spread?
We are not increasing DTY much. We are adding a very small volume of DTY, which is 14,000 tons per annum. POY, we are adding 19,000 tons. Initially, I wrongly mentioned 14,000. It's 19,000 tons. And FDY, we are adding is 28,000 tons. So this will get added by September 2026. Texturizing will start within next 2-3 months. But POY, DTY is a long delivery item, so that will start by September 2026.
So currently, what is the margins in three of our segment?
DTY has the worst of the margins. So DTY margins are hardly 2%. FDY would be close to 12-13%. POY would be around 6%.
Okay. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question to the management, you may press star and 1. The next question is from the line of Raj, an individual investor. Please go ahead.
Hello.
Hello, yeah.
Hi. Thank you for the opportunity. I just have one question. Sorry if I might have missed it because I joined a little late. So, what percentage of revenue comes from the top 5 customers? And has this concentration changed, meaningfully in the last 1 year?
Top 5 would contribute maybe around 7 or 8%. It's not.
Okay. And
we have a very wide base of customers, so there's no one customer taking more than 1.5-2%.
Okay, got it. And can you share the name of the top 5 customers? Like who are the ones who are? Hello.
I don't have it ready. I cannot give you the name of this customer.
Okay. Thank you so much.
Thank you. The next question is from the line of Udit Sehgal from Pinpoint X Capital. Please go ahead.
So just a follow-up question on the recycling technology, ecolysis. Is there anybody else in the world who is doing the same? Have they proven this technology? And I suppose in India there is another company called Ester which is doing a JV with Loop. Other than that, are there any companies who are experimenting with the same process?
See, India, Ester has announced. Ester, I don't know whether they are still going ahead or not because Loop technology is still not proven in the. Like there's one in US, Cycle. Then another one is Carbios.
Okay. And what kind of capacities are these people processing, sir?
So they are planning to put, like Carbios is planning to put, I think, around 100 tons per day.
All experiments.
But they are all on the similar stages. They have not gone ahead and their productions are expected anywhere in calendar year 27, not before that.
Okay.
And they have spent a lot of money. Like Carbios might have spent more than $50-60 million in research. Loop has spent more than $100 million.
Okay. So do we give
whether Ester is still going ahead? I heard a rumor that they are dropping this project.
So if technology is
Sorry?
Sorry to interrupt, Mr. Udit. Your voice was not audible. Could you please repeat your question again?
Can you hear me now, sir?
Yeah.
Yes,
Now
sir.
it's fine.
I'm saying, sir, it's such a first and unique technology. So once we establish it at a full scale, do we plan to scale it up further, or would you even think of licensing it to other manufacturers?
Yeah, we can do both. The demand is so much, both can be done. We will definitely like to scale it up ourselves also. And if we find good people and we can license it too, we will definitely look into that also.
And the sale rate of these recycled fibers, are they different from the rates of the fiber recycled from PET bottles?
Today, even though that is not up to the mark, but still sold at around 45 to 50 rupees more than the virgin fibers.
Okay, great. Great, sir. Best of luck for the project.
Thank you so much.
Thank you. Participants, if you wish to ask a question, you may press star and 1. The next question is from the line of Reed Jain from First Water. Please go ahead.
Yeah, good afternoon, sir. As you said that the price of the recycled fiber is rupees 40 to 50 rupees higher than the virgin fiber. Is this the main reason? We are going to make higher margins in the recycling project, or there are some other reasons also?
No, that's the main reason, because the customers, mostly branded clothes manufacturers, they want to produce everything from recycled. They are not able to buy recycled as much as they want. So it's based on that only. But yes, we have factored in, even if it drops to like 30-35 rupees, still the margin should be intact, because our cost of production will be much. It will give us some extra margin, then the margin of the virgin, and then this extra margin on top of that.
Okay. So if the price gap normalizes in the range of suppose 15% higher, so what could be our normal margins in recycle project?
Yeah, so then our margins will, what I have said, 80 crores can drop to maybe 50 crores.
Okay, so we can still be making a good profit.
Yeah.
Okay, got it. Yeah, thanks, sir.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question to the management, you may press star and 1 at this time. As there are no further questions from the participants, I would now like to hand the conference over to the management for their closing comments.
Thank you everyone for joining us and sparing their time to join us. We hope to have Concall again after 3 months in the next quarter results. Thanks a lot. Bye.
Thank you. On behalf of Filatex India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.